Hey team, welcome to April of 2023, and my name is Jeff McGinnis. I'm a loan officer with CrossCountry Mortgage, and today I want to discuss what mortgage rates have been doing over the last month and what that means for homebuyers and homeowners. Now, as you remember, in the March Rate Watch report, kind of took a turn for the worse with some fairly meager CPI numbers and a bogus jobs report. And so in the last month, however, we've seen some marked improvements in the bond market and treasuries. So let's cut to the charts and take a look. So as you can see, we got back most of the ground we lost in February in the month of March and in the bonds. And we can see the same sort of action happening in the 10-year treasury yield. Now, as we head into April, we're paying close attention to the CPI, which is our main bellwether for inflation. And that comes out on April 12th. And quite frankly, I don't see much in the way of improvement on those numbers because our March of 22 had pretty low inflation numbers, which was 0.3%. In March of 23, that will come out in the April release, and it may be similar. So we won't do much for a year-over-year average. Now, bear in mind, though, we have shelter costs, and those costs of renting or a rental equivalent of a home owned by someone that lives in the property is lagging behind the actual numbers in the market. Now, shelter costs make up a significant amount of the core CPI at 43%. As you can see, actual shelter costs are at 3%. But it's much like a roller coaster. So the front of the roller coaster currently is heading downward. So the real shelter costs are heading down, but the shelter in CPI is actually heading up. But at some point in time, it will crest the top, like in this roller coaster, and then start heading down. So currently, shelter costs in CPI in the blue line is actually heading up a bit, but it's taking this roller coaster ride with the actual shelter costs. So point being, guys, we've got some lower inflationary or lighter inflationary pressures coming because of the shelter cost component, which is a large piece of the puzzle. Remember, it's at 43%. So once the shelter costs in CPI start to go down, we'll see inflation numbers improve substantially. Now, in the meantime, it would seem that the Fed is trying to overshoot inflation. Remember, they said that inflation was transitory in 2021. Well, maybe it was a little less than transitory, and it was persistent, and maybe they showed up a little late to the party, which is okay, fine. You know, they not a massive crisis. They're now doing their job and doing what needed to be done. But it seems to be that they might be staying a little late to the party, and perhaps they need a friend to come alongside them and say, maybe you should give me the keys and take a little nap here on the couch till tomorrow. But not so much. Maybe they only bumped a quarter, not a 0.5% on Fed funds. So maybe it'd be the equivalent of having one last cocktail instead of doing, shots of Fireball. But at least at this point, we'll see. Okay, remains to be seen. So do mark your calendars though for May 10th. That is the core CPI number release for the month of April, which we expect to be better due to this core CPI number, core shelter cost number. So since rates were a little elevated, it's actually a good time to be a buyer, because what that does is it sidelines a lot of people. They're a little afraid to get back into the market. They're not quite either emotionally ready, which for those who are emotionally ready and financially ready, it's a great time because it takes away a bit of the competition. So get out there, make some offers, and get your house, because we are seeing some things that will be positive on interest rates and inflation, or I should say inflation and therefore interest rates. So it recommended that if you are ready financially and emotionally to get out there and start making some offers. Have a great one. I'll talk to you next month.